Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at the crazy macro landscape we've got ourselves in here, mainly because of the US election, but that's also throwing interest rates around, throwing yields around, throwing oil and dollar strength around, jobs numbers last week, CPI this week. And I think what we're seeing on the price side is just indecision and uncertainty, and markets just waiting for clarity. There's a lot of intraday volatility today, intra-week volatility last week. As long as we can hold above 60 on the BTC side of things, that's a win in my book. But looking at flows here, flows down slightly between all global products, according to James at CoinShares last week. Most of the outflows coming from Bitcoin and ETH, some multi-asset inflows, some Solana inflows, and some inflows in Canada and Switzerland. But for the most part, it's an all-burger show when we're talking about which country matters on the flows spectrum. Looking at the Bold Report's 30-day cumulative flows, this is also important because what we need, we do not want mega massive spikes. It's just harder to maintain this fever, especially post ETF launch. A lot of this was hodlers, old and cold storage that were migrating to ETFs, along with new buyers, sure. But from here on forward, we're probably more reliant on new buyers than old and cold storage. So maybe more of a purer signal now that we're multiple weeks out. If we look at just the flows between price excitement and arbitrage people coming in and smacking down the basis, we really don't have a sustained amount of flows here. Now, obviously, the total number in aggregate is above 16 billion, but we're not seeing, that I can tell, sustained buyers going long enough to keep price consistently higher. It's just very, very murky. Looking at IBIT individually on technicals, we are above the daily cloud. The daily cloud is fully populated here. We should get fully bullish signals within the next couple days here. It's going to be interesting if both on spot, on futures, on the ETFs, if we get pulled back into this range or not. Do we see resistance at a new diagonal level here? Or can we just maintain sideways chop in a tighter range, right? Previously, we've had, like in IBIT's case, 42 to 30, kind of the range. If we can just maintain chop 35 to 39, that's a win until the election, until we get some certainty here. But chopping above the cloud is much better than chopping below the cloud. BTC futures also the same. This measures on futures into the 100,000 level. So we would see premium expansion, basis expansion. The BitX product would probably outperform because that's going to get crazier with the multi-month premium or the quarterly rolls, right? There's some mechanics there that's why that would do better when things get wild, BitX. But we're not quite there yet, right? We're still very much in the range. The one thing we did have today was MSTR broke out from its multi-month range. So that's a good first sign. We are seeing some of the speculative stuff pick up a little bit. I'll talk about NVDA towards the end. Some AI coins did well today on the back of that as well. But it's hard to be bearish with a chart that looks like this. It's hard to be bearish if you've got anything pushing highs instead of pushing lows. Even if this gets smacked down and we're back at 160 in 2 weeks, that's fine. As long as we can maintain price above the cloud, we're good to go eventually for higher highs. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. Looking at Kraken today, we do have some of the coins that were popping off, pulling back a little bit, Tau, Sui, but there are plenty of others that are doing fine, just quietly outperforming BTC here on a 24-hour rolling period. BTC up a modest 0.75%, and some of these other coins doing decently okay. I half wonder if that's because the polls look like they're leaning towards Trump over Harris. I shouldn't say polls, I should say Polymarket specifically. This is BODEN. BODEN, it was down 99%, held that level for 6 to 8 weeks, broke out, probably done for now. TREMP also available on Kraken, depending on your jurisdiction. Similar story, down significantly, held a level for a lot of weeks and popped. I don't think these are multi-day trades here. I think this is just, if you see this and you're around and you pay attention, you get lucky, and that's that. You move on. But there are a few alts that still look fine. Aptos, some of the meme coins starting to do better. SHIB, Pepe. It's just going to take some time. We're almost there. We really just need to get past this little thing called the election, less than a month away, going to be decided by a few states here based on where the polls sit, based on electoral college. Depending on what you want to look at, I certainly have noticed the Trump polls, not polls again, I shouldn't say polls, the Trump outcome increasing as a percentage. If you look at something like Nate Silver's polling data, it still has Harris ahead, but this may matter less than the EC outcome. I'm not rooting for either of them. I just trying to figure out why we have this disparity here. Looking at the events for the week here, lots of Fed speak every day, just endless amounts of Fed speak. FOMC minutes on Tuesday. CPI comes in on Thursday. That should be somewhat mild down month over month. So that shouldn't be too much of an issue this month. And then the rest of the stuff, PPI, sure. I mean, there's the macro doomers, I feel, tend to focus on these data points much more than the people on the other side of the camp. The legacy bulls are just acknowledging that these numbers come out, but the macro doomers love to focus on every single percentage point of all of these prints that we get. Looking at US CPI, we have pulled up quite a bit over the past couple of weeks. Some of this being energy, some of this being oil, obviously rising significantly because of geopolitical events that have been going on. So this month's print will be fine because it was last month's data. Next month's print for this month will probably be higher on a month over month basis for the US. And then we get to see, what does the market think about that? Is the market fully ready to understand that that's a possibility, or is that going to completely surprise the market? Hopefully that will be forecasted in the data by the banks well enough that everybody's on board with, okay, inflation expectations are rising here because of oil. We could say because of natural disaster stuff in the United States. There's things we can point to that are obvious, and that hopefully won't be much of a surprise. In the UK, it looks like true inflation's at 3.5% as opposed to the government's reported 2.2. Still fairly flat, but has been rising here a little bit. And I think some of this is also energy in the UK. Looking at the nowcast from the Fed, CPI 2.25, that's this week. Next month, not much, but it is, as they say, headed in the wrong direction on a month over month basis. It'll also be interesting to see what the market does with a 2% PCE. Now, again, the doomers, depending on who you are, you love to point to some specific data point and say, oh, we're not there yet. We got to keep squeezing everybody. We're not there yet. Okay. I mean, I'm not going to disagree, but is the Fed's focus CPI or core CPI? Is it PCE or core PCE? I think it's just plain out vanilla CPI. We can look at all this other stuff, but I think their mandate, stable prices, is specifically related to CPI. In any event, this month fine, next month we get to have some fun. That print probably comes out around the election, so it may not matter, but timing is going to be interesting depending on how that works out. Looking at the CME Fed Watch tool, we're starting to price in no cut for this meeting. We've certainly priced out a 50 basis point cut. We're starting to price in no cut. Let me just refresh this to see if it's updated. But that's probably because jobs data looks okay. The numbers look okay. The inflation data, again, the expectations are probably baking in here that, yeah, we're going to see a little bit of an uptick in inflation in the data by this point, right? This is a month from now. So we do get a few more data points. And there could be enough evidence for no cut in November. But Powell has kind of said they're probably going to go another 25 in November. Looking at global rates, US in the white all the way up here, the effective rate around 4.83, 4.75 to 5%. And the rest of the world also potentially on its way down. The question is, how far can the rest of the world get? Along with the US, because of the debt burden, they need rates low, but at the same time, they can't let inflation just get out of control again. In the market, in the US at least, certainly getting ahead of itself, maybe expecting a depression, pricing in rates all the way down. Rates last week versus this week in the belly of the curve came way up, long end came way up. The jobs information, the new data, has certainly changed the outlook for how far the Fed is going to go in bringing rates down. Now that could change in a month, but as the market receives new data, it reprices the expectations. And so that's why yields have increased. As yields increase, that competes with the falling rates theories, the easing cycle theories, that competes with risk markets. And it gets a little harder for risk markets to go higher. We also saw a GDP now estimate curl down a little bit, but it's still well above 2%. So I don't think there's any massive or mega alarm there. And the liquidity side of the equation also ticked down slightly because of dollar strength. US liquidity also still basically flat here. So just a lot of reason to be volatile and not a lot of reasons to continue to break out in a massive, massive way. So I don't think there's a reason to panic on the asset side of things, but the market expectations of where the market thought things were going changed. The yield curve, which briefly uninverted, looks like it's ready to reinvert again, at least on the 10-2 curve, which I don't really think we've seen too much of, especially an inversion that happened this deeply to correct and then reinvert again. I mean, we had a little bit of that here maybe, but more odd behavior, just more uncertainty that the markets have to deal with and figure out. If we look across the bond complex, high time frame cloud stuff, just technicals on price appreciation or depreciation, bonds giving a lot of this back on the price side because rates are moving higher. As a group, technicals still look okay for a lot of this stuff. You know, it's not really threatening lower lows anywhere. TLT probably looks the weakest amongst the group. But across the risk spectrum, we need like a solid bedrock foundation of ideally low volatility. Not no volatility, but low volatility. So if the markets are repricing the bedrock of bonds and we've got auctions this week, we've got lots of stuff going on, that takes priority and precedent over trying to figure out whether or not the S&P is going higher. So it would certainly be best if the bond side, the rates side of the equation could settle down a little bit. Looking at 10-year yields in the candlesticks there, 10-year yields bounced quite a bit since the beginning of September. And in the blue, I have US oil prices. Oil prices tend to correlate with the 10-year yield because the 10-year yield can sort of be used as a proxy for not only the risk-free rate, but a healthy economy. If the market perceives the economy to be recessionary, the 10-year yield and yield expectations, rates expectations probably come way down. But if the market expects non-recessionary conditions, 10-year yield goes higher, oil goes higher, energy demand expectations bounce as well. So that's probably why those correlate. And then if we add the US dollar in the green here, this is also very correlative together. So collectively, ideally, we see low volatility for all of this on the risk side of things, but we will take number go down as opposed to number go up for these collectively. Doesn't mean it's impossible for things like Bitcoin to do well in an environment like this. It's just harder when we have headwinds of energy higher, rates higher, dollar strength. This isn't parabolic out of control, but intra-week, this will prevent things from advancing further, certainly. Looking at the S&P, I've said this for a few weeks now, high time frames, we're in the sweet spot of the expected move from the multi-year consolidation we had in 2022 and 2023. How much more can you really expect up here without consolidation? At a bare minimum, I don't know. It looks like we are priced for perfection up here. It doesn't really look like we want to do much of anything. If we zoom in on the daily, it looks fine. I don't see a trade here. You could argue W, cup and handle, you could argue a bunch of stuff on a technical basis, but I don't really see anything screaming that this has to go higher. This probably just waits for the election and figures it out. Trend-wise, it's fine, but I don't see a massive reason why this does much of anything. In the near term, you could argue mean reversion to 550 or less, but I don't really see anything here. And, we can look at presidential seasonality and October seasonality, and we typically have a resolution post-election. So that would align with Bitcoin expectations or Bitcoin adjacent product expectations for the rest of the year. Q's similar to the SPY. We've hit a decent target, a decent level. It just looks like it's consolidating. It doesn't look like it necessarily wants to go higher. I don't see anything bearish. I don't see anything bullish. It just is what it is. It doesn't really look like a great trade setup one way or the other. And that's that. Most of the time, you're not in the exact point where you're getting a move. You're just waiting. So we're just waiting here. There's really nothing to do. Even looking back here in 21 into 2022, this is a strong reversal signal. So we are far away from that on the SPY. This ended up being a head and shoulders, broke down, broke through the cloud, bearish TK cross. We don't have any of that quite yet. So I'm not in the bear camp, but I just don't see a reason that this necessarily just zooms higher. Looking at a few of the individual names, NVIDIA still looks great to me. It's down a little bit after hours. It looks fine on the daily cloud, 8-hour cloud, whatever, right? We can look at anything we want. It is very hard to argue that this thing is anything but ready for an attempt to move higher. Doesn't look as good as MSTR, I'll give you that, but it didn't break down, tried to flirt below the cloud and just held its levels. So maybe this pulls up, maybe it doesn't, maybe it goes nowhere, but it looks like it wants to go higher. It looks like it wants to make an attempt to move higher. Microsoft on the other side of that equation, briefly above the cloud, now back below the cloud. Tons of range chop since the beginning of the year. Really not much to speak of in any direction. But the more this chops below the cloud, the higher the likelihood that this does break down to around 350. Certainly not something that's particularly tradable at the moment. Amazon, the same. I don't think there's really a trade here on Amazon until this breaks above 190 again. We could see a move higher, but the cloud's on a high time frame does not look like it's ready to go just yet. And we may see what we saw in 2020 into 2021, where it looks like it wants to, and then spends a year just flat doing nothing. So this is why you wait for the breakout versus just trying to guess, because this thing actually broke down. It didn't go anywhere. So it doesn't quite look ready to me just yet. Tesla kind of similar. It looks like it wants to eventually break 270. It's just hard to gauge exactly when that's going to happen, but as long as it can make a series of higher lows here, as long as it can maintain prices above the cloud, eventually, 400, new all-time high. Like, that is a realistic possibility. It's just hard to say when, but it looks like it wants to consolidate and maybe break out in 2025. I had a few people asking me about emerging markets in China. I talked about China yesterday, but on emerging markets, even these charts, they look okay. Palantir is another one. It's in an up channel. It's super choppy. It's trending higher. This is VEA. This is emerging markets ex China. Developed markets ex China. Doesn't quite look like a breakout trade that's imminent. It looks exciting. I guess, it's at highs. This clearly triple top breakdown through the cloud. So we're not bearish, but we're not breaking out of 48, which would have been a horizontal level. I just don't see anything here that's attractive from a trading perspective. A few of the others, PayPal looks great. I cut Pfizer last week on Friday, and of course they're up today on some activist news. But at this point, I just think there's better places to be. If you are ready to be risk on, then there's plenty of options for you in that realm. But PayPal continues to slowly curl up. This is miners, WGMI, the ETF. A lot of the miners got angry today. On an individual name basis, you're looking for anything that holds or resembles a triple bottom here. This may break out, it may not. You'll find that a lot of these Kumo breakouts tend to have a reversal pattern preceding them, which is the case here. But we're not in breakout territory just yet. You can see where my alert is there at just above $20. But that would be the level to watch. Any horizontal, that's obvious. IREN, probably the best example. So a lot of the miners are gearing up for something. They're gearing up for something. And maybe ARK, amongst everything else, the speculative among the speculative, the truly altcoin of the altcoin world, we may see a move this quarter, 2025. A lot of people were piling in down here. It's up 38, saying it's over, it's going to zero. And it just chopped around. It's still making higher lows. The next step here is, can it make a higher high? We may not see a resolution on this until after the election. So as long as we can chop around above the daily cloud, that's a win. Anything that doesn't look exciting right now, I don't think it's worth sticking around and finding out. And we're all just kind of waiting for the next month here on the resolution of the US presidential election. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.